If you want to go very, very traditional, right? You want to go way back into time. Let's talk thousands of years ago. Gold. Gold is still around. People are still looking at this stuff. Gold prices have come under pressure ever since that positive vaccine announcement 2 weeks ago. But a lot of experts believe the precious metal still has plenty of time to shine. Citigroup actually just came out with a bullish note forecasting an average price of $2,500 an ounce next year. Will, where do you see gold ETFs headed going into the new year?
Well, I think it's higher, Eric, for a number of good reasons. Some we just discussed, but the stimulus right at the top of my list would be probably the most obvious one, and the one that's certainly driven gold prices for the majority of this year in 2020. But on the back of stimulus, you've got to talk about a weaker dollar platform going forward. Also, inflation expectations picking up as a result of the two things we just mentioned. Probably most positive, at least for a number of years. And then obviously falling real yields and the continuing volatility in the market. So for me, the conditions that drove gold to an all-time high this year are very much still in place. I think it's just natural that once you get to an all-time high in an asset class, there's some consolidation afterwards, and that's what we're seeing right now in terms of the price. But the fundamental conditions are still here, and I believe that they will be here for the next 12 to 15 months minimum as well.
Yeah, and if we dig deeper into the gold...
Oh, yeah.
Sorry, if we dig deeper into the gold story, the fundamentals of the gold market are looking particularly bullish right now, too. It's obvious to talk about things like the potential for inflation or the declining dollar. Those are big macro concerns that are bullish for gold. But we've also got very constrained supply. Remember, the gold mining industry is an industry like any others, and it's been hit by COVID just like every other industry, all the way from the mine to distribution to manufacture. All of that's been constrained. None of that seems to be opening up much. So the supply remains very constrained. And at the same time, demand has really never been higher. Investment demand, particularly ETF investment demand for gold, is at all-time highs. I don't see that changing. Whether it's just investors realizing a 5% allocation to gold is a nice way to provide some counter correlation in the portfolio, or whether it's folks just speculating that the price is going up over the next 6 months, that demand's going to be there. So you've got these big macro drivers, and at the same time, the fundamental microeconomic structure of the gold market is bullish as well.
Do you put much stock, Dave, into this $2,500 number? We're at $1,800 right now. I mean, when you hear stuff like that, does that make you think twice for a second, or you just ignore that kind of stuff?
I honestly, I think, these are sort of broken clock kind of predictions. Everybody's going to come out with their prediction for gold or Bitcoin or the S&P or the Dow. I tend not to pay a lot of attention to these sort of round number predictions. I tend to think much more about where the drivers, and the drivers right now do seem fairly bullish for gold. I'm not a big gold bug, right? I'm the first one to point out that gold is a non-producing asset. It's a psychological commodity, meaning it's only worth what somebody else will pay for it. But that being said, it's hard to argue with thousands of years of history of folks looking to gold as a store of value in times of crisis. And I don't know what we're in if it's not a time of crisis.